Ready for accounts payable interview? In this video, we will discuss frequently asked accounts payable interview questions and their best possible answers. Welcome you all to another video from Knowledge for All. If you are watching this channel first time, please subscribe. If you like this video, please do not hesitate to like and comment on this video. Let us start the interview questions. What is accounts payable? Accounts payable is money owed by a business to its suppliers. It will be shown as a liability on a company's balance sheet. Difference between accounts payable and bills payable. Accounts payable is money owed by the business to its suppliers. Bills payable are accounted for in the accounts payable account as a credit entry. What is the meaning of TDS? How it is charged? TDS means tax deductible at source. It is charged on base amount. What is an invoice and type of invoices? An invoice is a time-stamped commercial document that itemizes and records a transactions were purchased on credit. Type of invoices are standard invoice, credit invoices, debit invoices, pro forma invoices, expense report, timesheet invoices, commercial invoices, etc. What is goods receipt note? Goods receipt note is an internal document produced after inspecting delivery of proof of order receipt. It's used by stores, procurement and finance to raise any issues, update your stock records and to be matched against the original purchase order and supplier invoice to allow payment to be made. What is invoice matching? Accounts payable invoice matching is the process of matching vendor invoice, purchase order and the product receipt information. What is bad debt? Bad debt is an expense that a business incurs once the repayment of credit previously extended to a customer is estimated to be uncollectible. What is procure to pay? Procure to pay is an end-to-end process which covers all the steps from initiation of the requirements by a user or a department till the payment to the supplier. What is purchase order? Purchase order is a commercial document issued by a buyer to a seller indicating types, quantities and agreed prices for products or services. What is non-PO invoice? Non-PO invoices are invoices that are not based on a purchase order. Non-PO invoices means first line purchasing done for emergency purchase or purchase without proper procurement planning. Difference between PO and non-PO invoice. Accounts payable process is different for PO and for non-PO invoices, mainly when it comes to the invoice approval process. A non-PO invoice, on the other hand, has not been pre-approved and will therefore need to go through an invoice approval process within the buying organization. What is Debit Note? Debit Note acts as a source document to the purchase returns. This is a commercial document issued by a buyer to a seller. What is debit balance recovery? When payment is made to the wrong vendor or payment made in excess, in that case our payment has gone to the vendor. So for us, it is a vendor debit balance. The debit balance recovery is usually made by raising a credit memo for the regular vendors. What is a credit note? Credit note or credit memo is a commercial document issued by a seller to a buyer. This is a source document for the sales return. What is withholding tax? A withholding tax or a retention tax to be paid to the government by the payer of the income rather than by the recipient of the income. The tax is thus withheld or deducted from the income due to the recipient. A difference between EFT and NEFT. The main difference between EFT and NEFT is when EFT is applicable for both domestic and international transferring of funds, whereas NEFT is valid only within India. Most kinds of fund transfers are possible with EFT, but NEFT is mostly a deposit from the remitter account to the recipient account. Thanks for watching this video and all the very best for your interview. Take care.